What is going on, YouTube? It's Brendan for Market Makers. Equities markets are closed today. Tomorrow is their first day of trading, but Bitcoin trades 24/7, so you get the Monday kickoff show instead of the Sunday kickoff show. Guys, we need to look at some important patterns. If you didn't watch my harmonic decay Bitcoin video, highly suggest you watch that video because I show you the advanced Fibonacci techniques, esoteric concepts, and you're not going to understand some of these charts. Bitcoin price is essentially flat since I made that video. It's my most recent video. It's Bitcoin exclusive. Watch it so you can understand stuff, because going forward, I'm just going to keep building on these charts. We don't want to take an hour each video to re-explain everything every video and bore everybody to tears. But guys, looking at the weekly time frame, we're going to cover Bitcoin here, and then we're going to jump into the equities and look at where we're going to bottom, I think, in late March in the equities. And I'll show you this. It'll be the first bottom for the equities. I think everything's going to bottom late September, early October for the final bottom. But Dante's Descent, guys, our 20-bar weekly time frame, okay? Weekly time frame. We're on our weekly pivot candle right now, January 2nd. So you have that whole candle. We're on the pivot candle. Why is this important? Because we nailed massive trades. That's the 48.2 trade, 64% drop. Here we trade it in the room, 40% drop. Here's another trade I shared with you guys, 28% drop, okay? That's why we're focusing on this, and that's why it's important to watch these pivots. Dante's Descent's been playing out now for over a year. Daily time frame translation, went over this in depth. Notice none of these equal 144 days. That's why we have that layover time period transferring from the weekly, okay? The weekly candle is the most important, but we're looking for that pivot here. It came out to January 3rd on the daily time frame, but like I said, guys, it can be plus or minus within that daily or within that weekly time frame candle. So let's keep moving forward. The weekly time frame, again, watch harmonic decay, my Bitcoin video, if you want to understand this pattern, because I went in depth in this. Don't want to explain it again. Key concept, trading in the square of 144. Some of you that are more mathematically inclined were questioning, well, that's not the square of 144, because you were thinking literally the square, or some of you were thinking of the square root. Let me show you. This is a geometric Gann square, okay? This is a trading square. Gann made this super popular, the square of 9, but you can Google it. There's literally entire books written just about one of these trading squares, okay? You have your cardinal cross, ordinal cross. There's a harmonic formula to get these numbers. When I say we're trading in the square of 144, this is what I'm referring to. You can Google it and get the answer for that, okay? So let's look at this on the daily time frame, because the daily time frame, as you know, we have this pivot here I set for January 3rd. Where's our targets, guys? March 27th, April 2nd in that time frame. Looking for a Bitcoin price target of 12.5. I believe we're going to wave up here in this pivot point and then dump, okay? And it'll be a consistent dump all the way out to March 27th, April 2nd, right there with the spring equinox shortly thereafter. Again, covered all of that last video. Final bottom, looking at 4,611. These are just forecasted price targets, August 24th, 25th. As you guys know, the fib times line up beautifully with this as well. If we go out to Bitcoin, what's it doing right now? Bitcoin is funneling up beautifully in our volatility channel. Guys, this is another market maker indicator. This is the beta. Fractal Trade 15 just told me that he finished up the master one, so I'll be releasing that in the room. If you guys do want to join our room, you do get a handful of these custom programmed indicators as well, our MFI, our VROC, and now whatever we're going to call this one. I don't know what to call it yet, but we'll come up with a name for it. But if you notice, we had the same move before the 28% drop, guys. 18.7% move up, almost a 19% move up. Granted, smaller time from here, but this is a tighter channel now than it was when we moved up 19%. So we could have some type of fierce pump up. Don't have to, but we could. We need about an 18.5. Again, some symmetry in the marketplace. We need literally that same pump to get us up here in this weekly pivot to hold true. So we'll be watching that closely. If we look at this on the next chart here, our harmonic pattern that we have, our chameleon pattern that we have, my chameleon pattern, the 200 is moving down. Now remember, we haven't touched this 200 since just after the last spring equinox. That's how long it's been since we touched the 200. We have a VWAP coming down as well. Volume weighted average price just under 19K for that VWAP. So Could we pump up here in this weekly candle somewhere, you know, coming through the week here? We could, but we don't need to. Let me show you on the weekly what I'm really watching here. So this descending channel, remember, larger time frames have more power. Guys, I know I'm moving fast because we covered a lot of this in the last video, and you need to watch that video. It's really in depth, okay? But watch that video and be caught up. We have this descending channel, very harmonic movements here in the channel, looking for a fifth touch at the top of this channel at a minimum, and then is your move down. That's when you trigger your move down. Another view of it, that fifth touch coming from my wave 3 fib retracement would bring you back up to about the 1272, 18411. That's that point C. This gives you the harmonic ratio of spot 5 and then the expansion ratio of 2, okay? And that would drop you down to the 1414, our harmonic blueprint for Bitcoin, at 12,747. Again, March 27th, April 2nd, in that time frame. This is a weekly candle, okay? So this is a weekly pattern everything was based off of, so you have to understand there's that allowance there within the week. Now, all these daily times have actually hit within 3 or 4 days, but it's a weekly pattern, so it's a weekly time frame allowance. But this is the candle we're looking at here, guys, and that will be your bottoming candle. Now, it's important to move forward to the equities market. You like how fast I got through Bitcoin? It's like motor mouth. So you guys saw my esoteric chart that I laid out. And this is nothing more than equinox dates, spring equinox in green, autumn equinox in blue, and then I have my solstice dates. I left them off over here because this is the $6 trillion pump stimulus. The dates weren't very effective for doing anything here. But what's important to note, guys, market history. We base these things on market history, not just some random day, some eclipse or whatever. This is market history combined with key turning points in the market. You look at your spring equinox from the pandemic crash. Look at your candle. The very next candle began your massive rally up, okay? Now, what's interesting, you know, W.D. Gann wrote a lot about anniversaries, and we had Earth perigee date January 3rd, 2022. The S&P made its all-time high and its top January 4th, and then has been on this decline since then. Moving forward, guys, the Earth perigee date this year is January 4th, the S&P's anniversary. How interesting is that? And then we have the spring equinox out here at March 20th, 2023. I think you're going to get your pivot up on the weekly time frame, top out, and then you're going to be in decline until that spring equinox. You'll be bottoming out, then you'll have your next rally. So we need to look at targets for this as well. If we go over to our targets, taking the largest wave formation here, we'll come back to that, but I want to show you guys something, because to understand how we're selecting targets, where the S&P is going to go and what it's going to bottom at, you hear people on TV say, well, S&P can go to 3,500, S&P can go to 3,000. Jeremy Grantham has 2,400, 2,500 long-term trend. You guys know I'm a big follower of Grantham's. I've been following him since before the great financial crisis. He's been, I would consider, a market pattern mentor for me. But let's look at this, because people said you couldn't predict where the pandemic would stop, right? You had no idea where it would stop. Well, is that true? Let's take a look at some market history here, guys, on the S&P. The pandemic hit the 1.128 fib. 2212. You see that? 1.128 fib. I'm showing you this because it's going to come back into play. Let's go back to the two great bubbles. Guys, when you know, that last video we talked about Fibonacci sequencing, something else that's very interesting. Since the last bubble, the bottom, in March of 2009 on the S&P at 666. A lot of numerology in the market. But since that last bottom, the previous bubble was 5 years earlier when it ended. So .com ended 2002. The next bubble started 2007, 5 Fibonacci number. And it's been 13 years. We're talking about the S&P because the S&P topped January 4th, 2022. It's been 13 years since the last bubble. Again, another Fibonacci number. You can bring the sequencing out to much larger time frames and see how it plays out. And again, everything's about clusters and confluence. Let's go ahead and grab this. Here's our GFC crash. Here's a .com crash. But I want to show you something when I talk about market symmetry and how the market repeats patterns. This is why we are pattern traders. Look at the fib that you hit in the GFC, the 1.128. Pandemic crash, 1.128. Great financial crisis, 1.128. You guys want to take a guess? You want to take a guess what .com hit? .com. If we take the .com crash, regardless of where you pull this from, and I'll show you that in a second, okay? Because I know this seems like an arbitrary point. It is a huge demand wick, but you wick the one spot 128 once again. And if you said, well, I would have pulled it from here because this is your impulse up, okay, that's fine too. Let's go ahead and do that. Let's put the fib here. You still hit the one spot 128. You did not touch another fib, the 1272. Okay, so no matter where you pull this, every bubble going back to .com has hit the one spot 128 fib. Why is that important? Because markets move in patterns. We're going to look at the numbers in the symmetry here. Let's pull this up in the current time frame. So we know we have a great starting point, obviously the pandemic low, to take a fib retracement, okay? Let's do a couple of things here. When your friends and family, your fellow traders, they say, where do you think the broader market's going? That's why we're looking at the S&P, the broader market, right? This is indicative of how the price will move. The other markets may go down more. Well, they will go down more, as a matter of fact. They historically always do, the NASDAQ, the Russell. But the S&P is indicative of the health and welfare of the market. Take a fib retracement from the pandemic low. Come up to the all-time high. You bounced right off the 486, essentially a 50% retracement. You see that? You wick below your 200, 233. Now you could say, what's the next logical place to come down to? I would say this 618 at 31.95. As a matter of fact, the TA people, the people that call them chart technicians on channels like CNBC and Bloomberg, this is all they did. They pulled a fib retracement. So if they have this 3200 number here, they're calling that the bottom. Like Mike Wilson from Morgan Stanley, who won like TA Person of the Year last year, and he thinks this is the only bottom. He thinks this is the bottom. He said that several times now. This 3,200 range is the bottom, and then stocks are going back up. But that's because Morgan Stanley still doesn't have, as a base case, a recession for next year. They still have slow or low growth, okay? You guys know my base case, my premise is severe financial crisis, severe recession, stagflation, because we're not going to get inflation underneath 5%, in my opinion, for the whole year. You have to realize the market is pricing in a pivot by summertime, meaning the Fed's going to pivot, but you have to ask yourself, why would the Fed pivot? Well, there's two reasons. One, inflation comes down to 2%. That's not going to happen. It's only been coming down fractionally each month. Fractionally. It would take forever to get down to 2% the rate we're going. Or there's a severe financial crisis causing the Fed to pivot, which means they could be doing stimulus, which could mean increase a new wave of inflation again. I think the way the market's going to play out is this. We may get another quarter point hike, maybe another quarter point hike after that. Looking at, I guess that would be February, March. But you're going to get this push down by March. You will have your bottom, because remember, we have a bottom for Bitcoin. I have basically a bottom as well for the Russell, because they're tracking so close together. Their pivot candles on the weekly time frame are the same for the Russell and Bitcoin. Of course, Bitcoin and the Russell making their all-time highs within 48 hours of each other. That's how closely they're tracking, right? But when you look at the S&P, let's get some confluence. Let's see some confluence here. If we take a trend-based fib, come up to the top here, come down to this big wave right up. This is our strongest wave up here. And let's look at what we got here. So you can see, I'm going to expand this and draw out a little bit more for you guys. So you can see we have all these zones here. These are a little bit spread out, but you can see you're bouncing here and you're trying to hold that 38.15 level. The real strong area here, this is your trend-based fib. Keep in mind, look at your 618. 35.94. Look how you got some bodies. Look how the 200, 233 are magically right there as well. And you still wick below it. And of course, where'd that wick hit? That wick hit the 707, the sacred slice. But to me, where you're going in March, this is where you're going. And I can tell you that just by looking at it. So you have the 618, right? This is phi. This is the reciprocal ratio to golden ratio, 1618. And then you have 1. What is 1? 1 is the golden mean, okay? That's the golden section. That is the geometric mean between 618 and 1618. This is strong support here. Notice this is only a $50 difference between the price. So I think you're going to this 31.95, 31.43. Let's call it 31.50. Okay. I think you're going to this 31.50 by March. You will be descending, and this will be a big rally. Remember, because you have a lot of banks, a lot of big money thinks this is the bottom, so you're going to rally back up. We'll concern ourselves with that once we have the pattern of descent. But where is the final target? Well, let's pull this down some and look at this. So Jeremy Grantham, again, who, predicted the 89 Japanese bubble, successfully traded it, predicted the dot-com bubble, predicted the great financial crisis, and to the day called the bottom in the market, to the day, right? He is a bubble expert and a billionaire. And, he's older now, but he's done a lot of work studying the super bubbles. You guys have seen me play clips of him, and I can play some clips of him again if you guys would like me to do so. But what I'm looking at, so Grantham says 2400, 2500. I don't know if he uses Fibonacci, but that's pretty amazing that lines up with 1618. And if you look at this in the pandemic sense, down towards the bottom range, okay? Down towards the bottom range. Where I think you're going is at least this, okay? What we know, let's do some market history here. This is a long-term trend, according to Jeremy Grantham, long-term trend. And this is statistical averages using, looking at the term. I don't know what he's considering long-term, 10 years, 20 years. It depends what his model is. But what we're looking at here, guys, there's a couple different ways to look at this. You can look at this via drawdown. So let's go ahead and do this. Let me pull from the all-time high. If we go to 2400, you're looking at a 50% drawdown. Again, remember, the most important retracement levels in the marketplace are going to be 50%, which you see on my screen. Why is that important for the S&P? Because that's essentially what it did in 1973. It's essentially what it did in Y2K and the Great Financial Crisis, give or take a few percent. You can bet on, in a bubble, the S&P is going down 50%. Well, there's your long-term Jeremy Grantham trend. Look how beautiful that lines up with the 1618. So I think that target will be hit. Now, something else to consider, if we don't get a financial crisis, right? If some type of miracle happens, we balance the budget, both parties in the United States get along, the political parties, I mean, and they work everything out, and we cut costs, we stop wasting money. Okay, obviously none of this is going to happen, but if that did happen, we know historically in recessions, the S&P drops 35%. Look where your one fib is, 3150. Again, this is also why Mike Wilson is saying 3100, 3200, because these are all metrics that everybody can research, guys. This is the average drop for the S&P in a recession, 35%. So you're going down to 3,100 from where you are. That's from the all-time high. Now, from where you are right now, it's another 19% drop in the S&P. These are important numbers to understand. But if you're going deeper, if you go deeper than this 1618, Jeremy Grantham's long-term trend here at 2400, let's go ahead and pop this thing out here. Where would this go? Well, the one fib is below it, and that is at 55%. And anything below that, guys, the 61%, 618, I mean, this is exactly where I think you're going based on the 1.128 fib. You see this? 1.128, the fib that you've hit every single financial crisis in the S&P for the last 22 plus years now was the 1.128, which happens to equal V 618. Do you see this? The inverse, the reciprocal ratio to 1.618. Let me set that table. If you get financial crisis, if you have failures, a credit market issue, maybe, another war or an escalation of the current war, lots of different things could happen. This target, the 1.128 fib, 1855 on the S&P, is where I would look for the S&P to bottom when. Guess, if you watched my last video, when do you think I think that bottom's coming? Late September and the autumn equinox to early October, because we have market history on this, as you guys know. We have the dot-com crash started in March of 2000, bottomed October 4th, 2002. Just after the autumn equinox. You look at the great financial crisis, sold off heavily in September. Bottom, as a matter of fact, the Dow Jones was in October 11th, the Dow Jones went down 777 points, right? The greatest one-day drop in the history of the Dow. 777. Lot of numerology in the marketplace, guys. 777. I think it was October 11th, I want to say. For the great financial crisis. And then the market bottomed in March of 2009, S&P 666. Okay, lots of market history. Pandemic crash in March. We went over these dates. September crash also had 1929, 1987. So we know the equinox dates are very important based on market history. And we have over 100 years of stock market bubbles to look at. The vast majority of these markets will bottom and or crash on these equinox dates, the 245 angles in a Gann calendar. Not the specific day, guys, within that range of dates, okay? So if you have the March equinox is the 20th this year in 2023, within that date range, right? Could be a week out, could be a few days before, a week before, but you'll see it over and over again if you study the charts. If we get failures, this is what I'm thinking, 1855, 61% drawdown. At a minimum, expect a 50% drawdown. Hit Jeremy Grantham's number, the 1618, 2413. And you do have the one fib down here, but that's like minus 4%, 5% more. So two important targets is the 3200 for the pivot, and then the 2400 for long-term trend. And if we have a crisis, look for 1855, okay? And I'm going to draw this up nice, and I'll have the chart posted in the Discord and everything. By the way, guys, if you want to join our Discord, SimpleFX will pay for your first month if you want to try out their platform. Click our SimpleFX link in the video description to trade equities, commodities, Forex, Bitcoin, as well as a handful of altcoins. You can follow the instructions there, but you need to deposit $1,000 on their exchange. Take a screenshot for us and of your username. Send it to us in our Telegram link, which is also in the video description, or our support chat link on marketmakers.trade. And we add you to the room manually on our Discord, and you get trade signals, TA, live streams, fantastic community. So take advantage of that offer. They also are offering up to $5,000 bonus based on deposit, and that is instant. That goes in your margin to trade with. Fantastic platform. Try it out if you do want to trade equities. There's going to be lots of trades coming this year. So let's go ahead and take this off. I want to show you guys one more thing. Do something like this. Let's see if we have any X5 patterns here. See if we have what my chameleon pattern or another pattern here. It's going to be a huge macro multi-year pattern here. Coming down to our wave. Coming up for our C. I want to see what these ratios look like. And let's put this out here in March 27th. Let's just assume it's going to be around that same date as the Russell and Bitcoin. Look at the ratios we have here. So from your X to B, you have spot 45, getting close to that 46, your Kepler number. You have just over 50% retracement here from your A to C at spot 583. Your one spot 64. You just passed the 1618 coming here. And I don't have this directly on everything, okay? But you were looking at the ratios, how close it can be. So you have a collection of geometric, and I guess you could say, I think they're all geometric ratios here. You have a collection of geometric ratios that tell me this as well. You're coming down, and this will be a bounce here off your 3200, okay? These retracement levels look really, really good, very harmonic. And we'll see how this plays out. Let's go ahead and look at the S&P on the daily time frame. Daily time frame, guys, and doing this more near-term trend, that was the weekly time frame. You have your 200, 233. Couple of ways I would look at this wave retracement. I wouldn't use this wick from the Fed meeting just because it was hyper volatility and is not typical of what's in the marketplace. But if you're looking at this for where you're descending, you can see where you got caught up, the 46, 3803. You see that? You're bouncing around in here. But if we want to look at this for resistance levels, if we do get a rally back up, I would take one wave from this larger wave structure here. You can see you almost got to the 786, and you're holding support there at the 382, and you want to look at this. Look where your 618 is, your 200 and 233. If you do rally this week, again, another short trading week, part of the strongest days in the market, right? So if you do rally up this week, that's the 4,000 big psychological number as well. And if you take another fib wave from this high, excluding that scam wick there, see if you have any confluence, and you look at your 618 here is lined up with one of your, looks like the 707, yeah, the 707 fib. Lots of resistance here, okay? Also, lots of resistance down here at the 38.95 level, 3,900. So you can look for a minimum, and if you look at where you've been rallying to, 3,900, if you flip 3,900, look to see if you can move to 4,000, and you're running out of time. None of the, the S&P lasted much longer than the NASDAQ and the Russell, so you could see the S&P push up longer while the other markets pivot. I don't have the Dante's Descent pattern on the S&P or on the NASDAQ. I only have it on Bitcoin and the Russell, so I can pretty accurately tell you with a year background here of hitting all these trades that if that pattern continues to play out, we're going to have a pivot. But the S&P could go up longer, could take longer to get there. But these are the targets you want to look at, 3,900 and then that 4,000 number if we rally up, okay? So that's what we're doing on the S&P. Let's go ahead and look at the Russell. Russell, Dante's Descent, 20 bar tops on the weekly. You can see how clearly these pivots are playing out, guys. And these are 18, 19, 20% drops, okay? Massive trades. The Russell and Bitcoin allowed me to retire from my job. So this is exactly what you want to see here. You want to see if this pattern continues to play out. And this pattern here started the new candle, which will appear tomorrow, obviously, because the market's closed. But that's your January 2nd candle. And this should be your next topping candle, okay? And that's 7-day window if the pattern continues to play out, because as you guys know, patterns are nothing more than forecasts. You trade with them with Confluence. Daily translation, 100 bars, 99 bars, 100 bars. That puts your top out here January 4th. Again, that is when the Earth is in perigee to the Sun. The closest to the Sun the Earth is going to be. Apogee is the other inverse of that. If you look at an elliptical orbit, perigee and apogee happen at 180 degrees apart from each other, okay? So heliocentric events have pivots to play in the marketplace because you just saw this with the S&P this for its past all-time high. The year anniversary coming up January 4th, as well as perihelion day. So I would pay attention to it, and let's see what happens in the marketplace. But the Russell, if this continues to play out, we're going to see a top very soon as well, potentially on the 4th or coming up this week. Looking at the Russell on the weekly below the 200, 233. And let's draw this out really quickly as well. Take our pandemic low, all-time high. You're holding 1729. Once again, the 486. Where are you going? I would suggest that next target is most likely that 618. Let's look at some fib confluence here. Look for a symmetrical move. Go ahead and down to this strongest wave here. Look at the overlay. See this laid out beautifully. This is part of target selection, guys, when you're looking at what to trade. Should you trade the Russell versus the NASDAQ or versus the S&P? I'm trading the Russell because the patterns that it's giving me have provided me excellent trades. The NASDAQ looks super weak. No one can deny that, and people are making money trading it for certain, but I have better patterns on the Russell, right? And it's tracking so close to Bitcoin. It's been very predictable for me. Maybe other people have different experiences, but you can see why you're bouncing off here. You have a cluster here at 1715, 1729. Your 618 is where you're going to come down to in March. You can see that. Look at the overlay. Two different Fibonacci methods giving you strong support here at 1521, 1530, right there in that range. So let's go ahead and draw this out. Where will the Russell go? Let me get this declination here from the all-time high. This will be your March date where it drops to 1530. It's a 38% drop, okay? That's a 38% drop. Now, if we go down 50%, and as you guys should know, the NASDAQ and the Russell will perform worse than the S&P. Now, in the Y2K crash, the NASDAQ went down 84% and the S&P roughly went down 50%. So this is not going to crash. The crash is not going to mirror what the S&P is doing. It's definitely going to go deeper. But let's go ahead and pull this up and see what targets we have with some confluence. You have 953, 982 down here. What would this drop be if it came down to this region? That would be your 618 drop, right? That would be your 61.8% drop. If we come down and make this bottom at 1530 and the markets continue to decline, the S&P continues to decline. If the S&P comes down 50%, I think at a minimum you're hitting this target right here, the 953, your 1 fib on the trend-based fib, okay? That's important because that 1 fib is providing you a symmetrical move in the market. Your A, your B, your C move down, that's your market symmetry at 953. S&P minus 50%, Russell minus 61%. And if it goes below that, the S&P does decline to that 1855. Guys, I mean, all of these are on the table at that point. You could come down any one of these 65%, 71%. You could have, does that sound crazy? 77.88%. Does that sound crazy? It shouldn't, because remember, the NASDAQ went down 84%. Now, this isn't a doom and gloom prediction. I'm giving you variables that could happen in the market, catalysts that could drop this. Based on market history, I think you're coming down at least 61.29%, very close to the 618, and right here at the 1 fib at 953. And guys, I understand that sounds crazy, but that lines you up. Right? This lines you up right here with the pandemic low. So this is where the market fell to when it thought the world was ending, and then stimulus got added. 61.29% drawdown. And then the 1 fib up here, the market symmetry move, is the 51% move from the trend-based fib. I think I said that backwards earlier, but the trend-based fib is a 50% move, okay? So these are all on the table, but for right now, where you're going, I think, is this 1521 range. So let's draw this out. Let's see what kind of pattern we got here. Let me look at the ratios for these waves. See how this is presenting itself. The ratio is a little bit different than they are on the S&P, obviously. But let's put this out here, March 27th. This is what we're looking at. So you have a spot 546, spot 474, which is basically 486 or 50%, very close to 50%. And then your one spot 308, which is basically, once again, close to your one spot 272. So again, you have a combination of harmonic and geometric ratios here, but this is where I think you're going. 1521 in March, bounce back up, and then you will be descending at least to that 1 fib for a 50% drawdown, and then you could be coming down to that 1618 off this trend-based fib. And let me go ahead and put this here one more time. Now that I don't have the fib retracement in the way, give you a better drawdown. That's a 71.74% drawdown if you hit the 1618 off the trend-based fib. Market symmetry of the move gives you 50% right here at 1206, and then this will be a 71% drop down, 71.74. The two most important retracements, Gann said, were 50 and 75%. Same thing with Kepler's triangle, 46 and 786 are your two most important retracements. So very interesting, guys, but this is what the long-term trend here. And again, the bottom here, this false bottom will be your 1206 at your 1 fib. The real bottom could be one of these fibs here off to the right, 982, 865, 697, all depending on what happens in the cascading market if things go from bad to worse, okay? That's what we're looking at, and that will be that late September, early October date. We're looking at everything around the equinox dates. And I'll go ahead and make this chart up nice and pretty now that we explained it. Daily time frame, if you're looking for a retracement back up here to the upside, you can see the market did pump here closer to close. We'll see if we can move back up. The first target you got to flip is 1807. The 618 is an obvious target with a 200 right here at 1831, and that would get you above the 50 and hitting the 200. So watch these two ranges. You're at 1765. You could easily hit this week. You could easily go higher than that depending how strong the market wants to move. Finishing off with the NASDAQ. Man, I tried to speed through this, and it's still 33 minutes. Finishing off with the NASDAQ. Let's get these bubble moves, guys. Get our fib retracement here. You can see we bounced off beautifully off the 618 already at 10,503. And we pumped up, and now, of course, we failed below the 200, 233. Let's take a trend-based fib, and then let's remove the fib retracement level so I don't get these all mixed together. But we want to look at where our strong support is, and you have it right here at 9,000, roughly 9,650. You have a double layer confluence here. But, you know, let's look at this. So let's go ahead and get rid of this fib, the fib retracement. If we go The drawdown right now, I think what are we down? 33%? Let's go ahead and do this first. We are down the base. Well, the most we went down overall was 37. And right now we're, yeah, just at 33.88%. If we come down to the 1 fib, that's your 50% drawdown. And then if you come down to one of these other targets, knowing that the NASDAQ went down 80% before, I'm going to go ahead and pull this up. The trend-based fib seems to be laying out better than the fib retracement as far as hitting these key retracement levels. I'm seeing that in all these charts because it's basically simulating an ABC wave correction, right? So let's go ahead and do it like this. This will be cleaner to do it this way. And come up from the top here. So your 1 fib is your 50% drop, which that's all but guaranteed, right? You're almost there already. You're 16%, 17% away from there. So that's guaranteed. And that'll be your March bottom. I'm thinking that's going to be your March bottom. It could be lower, guys, but that's, as of right now, that's your March bottom. That's a 17% drop over the next 3 months. And then if we do come down in September, early October, there's your 618 at the 1272 for a minus 61.73% drop. That's at 6,429. All of these would be on the table. And this final resting place here, your 1618 would have you down minus 73.49%. So this is all feasible, and could you go lower? Yeah, I would have to add the 2.058. But realistically, based on market history, this is all but guaranteed. 50%, you're going down 50%. That'll be by March, okay? After that, this is going to be where you guys have to watch the channel. We got to watch the market go because all of these are viable targets for that final wave down after our summer rally that's going to form, our spring rally that will form from making this bottom. We'll have our next wave down as well. And that wave down, guys, if things change, if there's catalyst in the market, you could go deeper than this. But this number, 50%, like I said, this is basically all but guaranteed in the marketplace. Let's see if we have anything else here to do. Let's go ahead and look at this on the daily and wrap this video up. I know it's getting long. We have Wyckoff adhering beautifully. Your 200, 233 are much higher above you. The NASDAQ's super weak. You have rotation going on in the marketplace. 45 angle, notice how you're stuck just below it, right? So you're trying to get this flat. Now what happens in Wyckoff, guys, is what? Your pivots, right? So you get down thrust, you come up, make up thrust, make a double top, come up, make a bunch of shapes here, fall apart. What this might be doing, and we'll see how high up this goes, but if you get this type of motion, that's your Livermore pivot, right? And sometimes you get the back test again of the range, and then you pivot out. So watch those cups the same way when you see price wants to break up, pull back, and then break out and shoot up. You get the same thing on the bottom, okay? So be very careful, be very aware of this. You may just get a slow roll over to the side like this, pull back, pivot out. Something to watch. But let's go ahead and throw some fibs on that, and we'll finish this up. I know this video got super duper long. I'm gonna avoid that wick right there. That's way too high still. What I want to see on the S&P, let me grab this larger wave first of all. Let's try this. I mean, everything's way too high. All right. So the NASDAQ, I don't want to use the big wick up. The 382 at 11,161. I mean, it's kind of sad. I mean, I would think we can get there. We're at 10,000. What are we at? 10,960. I mean, the targets for the NASDAQ are really hard to give you guys because it's so poorly performing. It's super weak. I'm looking at it here in the Wyckoff structure. If you don't even roll up out of here and you just end up banging your head on the 45, this would be your pivot down, okay? So this is just performing very, very poorly. But if it does get some growth up here, watch for 11,161, 11,294, and I would guess, I mean, again, this would be a guess, guys, but I would guess the 618 at 11,462 would be the base of this range. As you can see, would provide very strong resistance, and that's if you get that kind of rally. You may not. You may barely get your head up here and start rolling over and falling down. So pay attention to the NASDAQ. This is weak. We did have that strong move at the end of the day, and this is the finishing up that strongest week of stock market history. But we have our pivot dates, guys, and I'm telling you, watch the pivot dates because we're on that candle now. for the anniversary for the S&P, and obviously the pivot for Bitcoin and the Russell. So this will be interesting to watch to see if you get any upward momentum. But all right, guys, I hope you enjoyed this video. It's a long one. I'm sorry. Try to go as fast as I could through it. If you have any questions, please do leave your questions, comments, all that good stuff in the video, and be happy to answer them for you guys. I hope everybody had a fantastic New Year, by the way, and see you guys next video.